Finance Minister Nirmala Sitharaman is all set to announce Union Budget 2023 on 1st Feb. So a lot of expectations building up around right from changes in the income tax slab to rejig in the new tax regime, fiscal deficit targets to GDP growth, a lot of expectations from the corporates, sector representatives and even from common man, a common taxpayer, a salaried class. So today in this discussion, I'm going to focus on taxpayers' demands, and with me is Alok Agrawal, partner Deloitte India. Alok, welcome to the show.
Thanks.
And we are going to talk about the kind of expectations or demand a normal taxpayer has from this budget. But before I get into the details as to what needs to be changed and what kind of reliefs are expected, I want to understand the current problem of a taxpayer. Because, whenever we go on ground and we talk to people, a salaried individual actually wants a disposable income, an increase in the disposable income, some money in their hand, in their pockets to maybe spend or invest more. So what is the ground reality?
Sure, Kavita. So, as you rightly said, this is that time of the year where the salary taxpayers have a long wish list of expectations. And over the years, unfortunately, there is a feeling that a large part of the tax burden from an overall economy perspective falls on the salary taxpayer.
Right.
As we know, PM Modi had commented a couple of years ago that there are only about 1.5 crore taxpayers who actually pay tax.
Okay.
Now that a number may have changed a bit, but that shows the scale of the problem in terms of the small tax base. Now, I suspect that a large proportion of this is a salary taxpayer.
Right.
So, the government had introduced, new tax regime, but we'll talk about that. But coming back to the problem is that you have tax rates which have not reduced. In fact, for higher income brackets, tax rates have only gone up with surcharges, etc. And you have some deductions, exemptions, which have kind of become, very largely irrelevant because of the inflation over the years, where the limits have not changed. We will talk about that. So effectively what has happened is, even for those taxpayers who are not in the higher tax brackets, the effective tax burden has increased. If you look at the real value of the income they are earning as compared to the tax they are paying. So I would say that is the problem of the salary taxpayer.
But looking at the government's outlook and the kind of government this is, Alok, won't you agree that this is a very reformist government, a government that believes in empowering a taxpayer or salaried class, or for that matter, every class out of the society? So in spite of that, why don't we have a bigger chunk in the tax net?
Sure. So, yes, I mean, there are several great reforms, and one area which the government did attempt some reform in the individual tax area is with respect to the new tax regime.
Right.
And as far as the new tax regime is concerned, the thought was good that let's simplify it by not having too many deductions and exemptions, and let's provide for lower tax rates. But the billion-dollar question, if I may, is, how attractive do you make it?
Exactly, exactly. And I mean, apart from that, a lot of people are actually not aware of the new tax regime. So let us just begin with this. What exactly is a new tax regime? Because we've seen a very low number of onboarding, talking about this particular new tax system. A lot of people don't understand. A lot of people believe that, it's for people who are the lower income ones, who don't want to pay tax, or maybe who can just get away with the old tax regime. But who exactly can be a part of new tax regime? What kind of taxation and tax slabs are we talking about? And as compared to the old tax regime, where we saw a lot of people were actually saving and investing because they had to take these tax benefit, the new tax regime just takes this discipline away from you. So what is the new tax structure?
Yes, sure. So Kavita, that's a very important point you made, so we'll come to that. But as far as the new tax regime is concerned, the government has introduced more slabs. So let's say if we go up to 15 lakhs where the 30% tax rate applies, there are several slabs, right? And the rebate which is there for low income taxpayers is still there. So up to 5 lakh rupees, you still have a rebate under Section 87A,
Okay.
which effectively ensures that you don't pay any tax.
Right.
So the idea is that they still want those individuals to file tax returns just to ensure that the tax base is there with the government in terms of the data of taxpayers, but effectively they will not pay any tax. So let's say from 5 lakhs to 15 lakhs,
Okay.
they have split it into several tax slabs
Okay.
with graduated tax rates.
Okay.
So the problem is more in terms of what you are foregoing if you want to take this new tax regime.
Okay.
So you are pretty much foregoing all the exemptions and deductions except for one or two exceptions. We'll talk about that. So let's say you have standard deduction of up to 50,000 rupees for a salary taxpayer. Now, in a new tax regime, you forego that standard deduction.
Okay, you don't get that.
No.
Okay.
Then, in India, we have so many individuals who are staying in rented housing, right? Because they don't have home ownership. So for them, the house rent allowance was a very attractive exemption
HRA, exactly.
under their compensation structure. So now the HRA exemption is not available in the new tax regime.
Okay.
Then over the years, as you rightly pointed out, people have started contributing to Provident Fund, people have started contributing to PPF.
Yeah.
Now you have Sukanya Samriddhi, you have, housing
NPS.
loan principal payments.
Yeah.
So you have so many of those investment-oriented, items in the Section 80C deduction,
Yeah.
which is capped up to 1,50,000 rupees per annum,
Okay.
which is also not available. So, when you have salary taxpayers who are, let's say, growing in their careers after a few years and they start planning to save for the long term, they may have taken Provident Fund under their company structure, and they may have started making some other investments that we just spoke about.
Right.
For them, it does not make sense to forego that 1,50,000 of ATC deduction.
Yeah.
So this is one of the main reasons why people have not really gone for the new tax regime.
Exactly. And also, do you also agree to the fact, because we've been talking to a lot of experts and industry representatives, and one viewpoint also said that India as a country is going beyond tax saving investment. Somewhere down the line, the mindset is such that tax saving is fine, that's needed, but that's not something that can actually accomplish your financial goals. Do you think the government also has this in mind, and what would be the exact intention of having this new tax regime in that case?
Yes. So let's say, we know that a lot of individuals now in the retail side are investing in the stock market through mutual funds, through SIPs, right? So I would agree that they are not really making their investment decisions based necessarily on tax
Saving instruments
alone. But having said that, wherever they see an opportunity to get a tax benefit as well, they would obviously prefer that.
Exactly.
So let's say that if the government makes the new tax regime more attractive as compared to the old tax regime. Yeah,
How
so
would
let's
that
take an
happen?
example.
Yeah.
So I would say couple of the basic items what we spoke about, for example, the standard deduction, right? Because there is no proof you have to give. It's a flat 50,000. It makes it very simple for that to be included in the new tax regime. You could also give exemption for HRA, because if you are recognizing the challenge of the salary taxpayers, especially who are building their careers from their initial days to take rented accommodation, because most of them are traveling to metros and tier 1, tier 2 cities to take up jobs. If you recognize that challenge, then HRA exemption would also be important to make the new tax regime more attractive. And then lastly, you could perhaps look at NPS. Let's say while the new tax regime does allow the 10% employer contribution as exempt, but that is very very uncommon. In our experience, we have seen very few employees.
For private sector. For
Yes.
private sector uncommon.
Yes.
Okay.
So we have seen very few employees opting for NPS, whereas what they would
Totally, yeah.
they would prefer to do is they would prefer to make their own contribution where there's a deduction of 50,000 rupees under section 80cc D. So if that, maybe that 50,000 rupee 80cc D, if that can also be included, some of these things would help in making the new tax regime more attractive.
Okay. So for retirement, PPF out and NPS in, that is what the thrust should be on.
Yeah, I mean, if that is the thought of the government that we want more people to migrate into NPS, then perhaps they could incentivize, taxpayers by allowing the NPS-related deductions in the new tax regime. Because currently, what we see is only taxpayers at, let's say, maybe around the 10 lakh rupee annual income. They may find the new tax regime more attractive.
Totally, yeah.
Once you start going above that, and nowadays you have a lot of middle class taxpayers whose annual income is above that.
Totally, yeah.
Once you start going above that, and they obviously start making deductions into the ATC kind of investments, then for them the new tax regime is not attractive.
What about tax slabs? Any changes should be there done?
Yes. So let's say if they also reduce the maximum 30% to, let's say, 25%, I think that would also make it very attractive.
Okay.
Now, the government obviously has a different idea as far as the very high salary taxpayers are concerned, because they had increased the surcharges, due to which the effective tax rate for somebody above 5 crores of annual income is nearly 43%. So let's say even if we keep them aside, for the vast majority of the middle class salary taxpayer, if they reduce the maximum from 30% to 25%,
Okay.
I would say that would also go a long way in making these taxpayers move from the old to the new regime.
So this will actually fade out your old tax regime? Is that also the intention, now slowly, just get it out of the system and just make people...
Yes, I think that perhaps was the idea of the government, but we have a long way to go.
Exactly,
because
yeah.
if you look at the proportion, only when they have a reasonable proportion, I would say even a majority of the salary taxpayers who have moved to the new regime, only then they can think of removing the old one out.
Yeah.
But I would say that's early days for that.
So, okay, let's talk about the old tax regime now. ATC, I don't know, I mean, since a very long time, there has been a demand of having more investment instruments, maybe more creative investment instruments, that would also help you save tax and align those kind of instruments with your financial goals, increase the 1.5 limit. That has not happened since a very long time. If at all the government tries to do something over here, what could be the working area, or what is the scope of doing any sort of changes?
Sure. So, Kavita, ATC, the last increase was in 2014 by Finance Minister Jaitley. Now,
Wow.
that is, we are 9 years,
Yeah.
into 23 budget now. So, if you look at the inflation, we are completely, gone past. If somebody even looks at the cost inflation index that the government prescribes for calculating long-term capital gains tax, right? It's the official index under the tax law itself. Then also we would say that the bare minimum limit for ATC should be at least 2.25 lakhs to 2.5 lakhs.
People wanted 5 lakhs.
Yes. So, there is a lot of room for looking at ATC limit.
What about having more investment instruments in it? I mean, and especially more market-linked products, because somewhere down the line, we also feel that the government wants to encourage people to participate in the equity market. The participation of a retail investor needs to go up.
Yes.
How can we add more to it when we talk about ATC?
Yeah. To be honest with you, Kavita, ATC has a fair number of different items in it.
Totally.
Yeah. The only thing which I can think of, which used to be under a separate section called ATCCF, which is infrastructure bonds, which was removed many years ago. Given the government's focus on infrastructure investments, perhaps they could consider one of those kind of items in the ATC basket. But the problem is not in terms of what are the options under ATC. The problem is the overall limit. Yeah. So unless they enhance the overall limit, it will not make much of a difference, because people are already exhausting that limit through Provident Fund and PPF.
Yeah.
PPF
a lot
is
of
also very
insurance
popular.
policies. Yeah, yeah.
Yes. So if you look at housing loan principal repayments, even that is under 80C.
Yeah,
Now
yeah.
with the increase in housing costs over the years, it
That's
just
been a
doesn't-
demand, yeah.
yeah, it just doesn't make sense to an individual taxpayer, because most of these items become irrelevant. They are not able to claim any tax breaks on these items because they've already exhausted the 80C limit through the basic item like provident fund, etc.
So the interest payment on home loan, how much according to you should be increased to? What's
Yeah, so under section 24, for example, we've had a deduction of 2 lakhs which is allowed on interest on housing loan. Now this also coincidentally was increased by FM Jaitley in 2014 itself.
okay?
And again, it is far below the the current inflation rate, as I just explained. If we look at it, so again, a bare minimum increase of at least 1 lakh, if not more, given the number of individuals in India who are taking housing loans, and for them 2 lakhs on an annual basis is far lesser than the interest component of the EMIs they are paying on their housing loans.
Okay.
So again, there's a lot of lot of logic or rationale for an increase in the limit under section 24 for interest repayment on home loans.
What about first-time home buyers? Because we've seen a rise in home loan, and people buying property for their consumption or maybe for their investment. Anything specific for first-time home buyers that can be given?
Yes, again, now the government had introduced a deduction, an additional deduction of 1.5 lakh rupees for affordable housing, and that was only provided for loans taken till March 2022.
Right.
Now, strangely, that was not extended, but we are hoping that the government will relook at this and, extend that timeline, because obviously now you have stopped the deduction only to those individuals who had taken loans prior to March 22, whereas many more individuals continue to take loans. That's one, in terms of an extension of the timeline for the loan. And second is even in terms of the absolute size of the value of housing, because that was only up to 45 lakhs, if I'm not mistaken, which is a very, very small amount.
Right.
Even if you look at tier 1, tier 2 cities, that may fall
Not
short of a majority of taxpayers. Because if you really want to give a benefit for the taxpayers who are paying tax, because that's where it makes sense to claim a tax deduction. If you're paying tax, then obviously you have to look at what category of housing does that taxpayer actually end up using, which is perhaps far more than the 45 lakh kind of ticket size.
Right. Anything on 80D you think should be changed, especially for senior citizens?
Yes, Kavita. 80D also needs another relook in terms of the limits. So we have the two limits of 25,000 and 50,000. Now, while they have increased the senior citizen limit a bit over the years, I would say there is a stronger case for looking at the basic limit of 25,000. Because that is where they have not made any changes over the years. And the COVID pandemic has taught us how important it is to have adequate health insurance.
Yeah, totally.
So many people have realized that the 25,000 rupees is not adequate, and they've had to lose, tax breaks to the extent of the additional premium that they are paying. And also, the preventive health checkup sub-limit within that, which is 5,000 rupees, also needs to be relooked.
Okay.
Because these are, basic necessities, and if we have to really provide a genuine deduction, then we need to relook at some of these, because again, for a family, a 5,000 rupee limit of preventive health checkup is not sufficient, especially when it's part of the 25,000.
Exactly.
So maybe they carve out a separate one for preventive health checkup, and they look at increase in both for the preventive health checkup as well as for the regular insurance premium.
So let's move on and let's talk about LTCG and standardization and uniformity, getting uniformity in the capital tax gain structure across asset classes. Do you think that's also the need of the hour? Looking at people, look at how investment aware people have become. It's also the government's responsibility to encourage people to think about their financial goals, their investment planning, and so LTCG and the entire capital tax gain structure needs a relook.
Yes. So there's a lot of talk in the last, I would say even in the last couple of years, before the budget about rationalization of the capital gains tax rates. And it is genuinely very complicated. Now the biggest area of focus is where the maximum people enjoy the benefit, which is, let's say, the long-term gains for equity shares and equity-oriented funds, where the government brought that within the tax net at 10% without indexation. Where you're holding the securities or mutual funds for at least 12 months, right?
Right.
Now, there is some thinking there whether you need to relook at the time duration, whether holding something like this for only 12 months is genuinely a long-term
duration,
or, you know, or whether you need to increase it to at least 24 months.
Because it's equity.
Yes.
Okay.
For example, debt mutual funds have a time of 3 years, right? So there are arguments that, you know, there's a mismatch here where debt mutual funds are a relatively more stable, less volatile kind of investment as compared to equity, but you have given a 3-year period for that as compared to a 12-month year. Now, of course, the average taxpayer who enjoys the exemption may not be very keen on this change of having an increase from 12 months to 24 months. But there is some...
But there's the volatility logic which makes sense. Yeah.
There's some talk about, you know, rationalization between this. For example, you know, you have property which is in the 24-month bracket, right?
Okay.
So if you're holding immovable property for more than 24 months, it becomes long-term.
Okay.
Now you have foreign securities also at 24 months.
Okay.
So if I'm holding equity shares, let's say of a US company, it's at 24 months again. If it's more than 24 months, it's a long-term capital gain. I get indexation as well as I pay only 20% on the net gain after reducing the index cost.
Right.
So I think what has happened over the years is because of changes on an incremental basis every few years on one asset here, one asset there, it has become fairly complicated. So I do agree that there is some need to rationalize, but the key question again is twofold. One is, how much does it help the government in improving their tax collections?
Exactly,
because the government would certainly look at that. And whether the change will perhaps even impact the stock market.
Exactly.
Because obviously, you know, you don't want a big impact on the sentiments of the retail investor. As we discussed, you know, there's a huge amount of retail investment in the markets over the last few years.
Now, let's talk about NPS, and after that we'll wrap up this discussion. A lot has been going around, you know, to make this investment product more attractive. So there are obviously tax breaks that you get as per ATC and ATCCD. But in spite of that, people who compulsorily have to invest are invested. But otherwise, if you talk about private sector employees, they are not too keen on adopting NPS as an investment instrument for retirement. Also because the lock-in of 60 years. How can the government, through more tax breaks, maybe make it more attractive, or is it even viable to do that? Because you're talking about retirement product, there has to be a compulsory lock-in, otherwise you won't be able to get that corpus.
Yes. So, Kavita, absolutely. NPS, the government has been focusing on over the years, but they have been giving small benefits, and there may be a case now to give a little more significant incentive for a taxpayer to start looking at NPS. And I would say there are two reasons for it. One is, let's say the limits are small. For example, we discussed about the deduction under ATCCD, where the employee contribution into NPS only gets you a 50,000 rupee deduction. That's over and above the ATC. Now, they have another deduction where the employer contributes into NPS. So that will, let's say it's a part of your CTC, where up to 10% of your salary can be claimed as exempt, you can say effectively tax exempt,
Okay.
as employer contributions. But again, what the government did recently is they introduced a cap of 7,50,000 rupees.
Yeah, yeah.
And there they included NPS, Provident Fund and Superannuation Fund. So again, those individuals who are looking at going for NPS because they already had PF, now are looking at this limit and wondering whether it makes sense for them to do it.
Exactly, exactly.
And the other point is that unlike, let's say, Provident Fund or unlike PPF, the annuity that you get in the end is taxable.
It's taxed. So it's not entirely an EEE product,
That's right.
I mean, I think 60% is tax-free, and then on 40% you've got to buy an annuity which is taxed.
Absolutely.
So it is my retirement money and I'm taxed for it.
Yes. So that's another reason why it's not attractive enough.
Yeah.
And the individual taxpayers then compare it with, let's say, direct investments into the stock market, whether through mutual funds or otherwise.
Exactly.
And they feel that, you know, if I have that flexibility to do it
Then why
myself,
not? Yeah.
then why should I go through NPS and pay taxes?
All right, so in the end, just your last take, it's a full-fledged last budget of the Modi
That's
government. Pragmatic or populist?
I would say more populist, because always we are optimistic, right?
Totally, like always.
So I would say yes, some tweaking to make the tax slabs more attractive for
Right.
the individual salary taxpayers would make it very attractive for taxpayers to earn more, save more, and then spend more, right?
Yeah.
Which is what the government should be looking at.
Exactly. Save more, spend more, and then invest more. That's going to be the mantra. Thank you so much for being on the show. And with that, it's a wrap for this conversation. Thank you so much for watching.